Hey, what's going on, team? It's Ricky with TechBot Solutions. Hope that you guys are all having an amazing Sunday. Welcome to our Sunday Stock Talk. And don't forget that it was daylight savings. So if you feel like you rested a little bit better today, it's probably because you gained another hour. So let me go ahead and start sharing my screen so you guys can see exactly what it is that I'm looking at. This is the NASDAQ market. Based off of previous performance, it has not been doing very well, nearly at 52-week lows. If we look at NASDAQ futures right now, so NASDAQ futures trade longer and more often than normal trading hours. As of right now, NASDAQ futures are down 0.72%. So that means that if the stock market were to open right now, we would be down over 2% on TQQQ. So futures are in the red, but there's many times that by the time the market actually does open, that futures can be in the green, or we could be deeper in the red, right? So I just wanted to take some time, prepare for this up and coming week. I made a video earlier today and it seemed like it got a lot of positive feedback. I tried to break down and make it a little bit easier to understand what the CPI data report is and how to read it, right? Especially with current market expectations. So I hope that you learned something new in this video. If you do, please consider dropping a thumbs up. And remember, if you want to ask me any question, you do have to subscribe first to the YouTube channel, and then you can type it in right in that live chat. I'd be more than happy to answer it for you. So let's go ahead and jump right into it. If you want me to break down your stock, just type out the ticker symbol, and I would be more than happy to break it down for you. So here we go. Give me one quick second. Alrighty. So we got QQQ daily indicating bullish, hourly is indicating bearish. No, not necessarily, right? So if you look at the 5-minute, still there's no signs of higher highs or higher lows by any means or anything like that. So I wouldn't say that. Let's go to Walmart. So we have one of our viewers asking for us to break down Walmart. When looking at this on the day chart, I like to look at overall direction in comparison to a lot of the tech companies. Walmart is not doing too bad, right? So if you look at all-time highs, I mean, it's had its all-time high just a couple months ago, kind of earlier this year, at highs of what is that, nearly 160, so 159.49. And then as of right now, it's trading at 140.97. So Walmart, a great performing stock right now. It's down about 11, almost 12%. It looks a little bit more on the overbought side. It tends to trade within that 130, 135 range. Obviously, Walmart is not going to be a stock where you're going to make a ton of money, yet alone. It's not a stock where if you intend to make a ton of money anytime soon, it's probably not going to be one of those companies, right? It doesn't offer that type of ROI based off where we're currently at and based off previous highs, and also with market conditions. Walmart's a very big company, right? You can see its overall market cap is at $382 billion. So it tends to have a more common resistance range, although we did hit highs of 159. I kind of like to remove any outlier, right? So normally it tends to have a resistance right around 148. And I think it's very important to set realistic expectations, especially if you're getting a little bit newer to trading, so you're never afraid to lock in profits. So when it comes down to Walmart based off of previous highs, it looks like it does have that resistance right around that 149. I would wait a little bit more for a pullback so we can get closer to that 128 to 130 support range and see if you can make something happen with this range from 130 to highs of around 148. That range, in my opinion, seems to be a little bit more attractive versus trying to get in here, sell it at 148, and then your downside risk is a lot higher, right? One of our big focuses are risk to reward ratios, and you just always want to make sure that your upside outweighs your downside. So let's go ahead and move on to the next one. We have someone asking for SOXL. Alrighty, let's go ahead and break this one down. So SOXL performed very well towards the end of 2021, but just like everything else, it's been selling off. So the cheap can always get cheaper. It went from highs of $73 to now lows of around $8.99. I'd be very careful with this, right? I mean, there's no easy way to put this. you can hope for something to happen, but this thing has not indicated signs of a recovery in a really long time. So instead of overcomplicating it, just set your alerts, right? If this thing actually begins to indicate signs of an upturn, great, you could follow up with it. Until then, I wouldn't try to find the bottom, because with that mindset, it was cheap back at 19. It was cheap back at, 23. It was cheap after it sold off and hit lows of 28, but the cheap can always get cheaper, especially with this up and coming CPI data report. It's going to be super, super important for you to be aware that, the market can definitely get worse. And with us being so close, so looking back at QQQ, with us being so close to previous all-time lows, not previous all-time lows, 52-week lows, I just think it's going to be very important for you to be aware that if our CPI data report or inflation report comes in worse than expected, we're not far from making new 52-week lows. So let's just make sure we take that into consideration, especially with something that's been so aggressively selling off, right? So let's go ahead and move on to the next one. So I really do appreciate you guys asking for me to break down your stock. So again, just make sure you share it in the live chat and that you drop a thumbs up on the video. So here we go. We got Tesla. Let's talk about Tesla, because I don't think we talked about it in our last Sunday stock talk, and especially with it, I think it's worth talking about it as it is sitting at 52-week lows, right? We're very oversold. Other than the obvious, right? I don't want to repeat it in every single breakdown, but can the market make new lows? Yes, right? Inflation report is going to be on the 10th of November. Once it gets reported, the market could drop. Understand that, right? You have to respect that. But my job is not to be perfect. I will never be perfect, right? My job is to take advantage of opportunities that make sense. And although maybe Tesla is not as bulletproof as Microsoft and Google and Amazon and Apple, it's still a very attractive company, right? Especially with so much attention that Elon is giving to its Optimus robot. Elon says that one day he thinks Tesla will be one of the most valuable company that's publicly traded. At that point, from where we're currently at, right? Current market cap is at $655 billion. So at that point, he expects, Tesla to not double in price, not triple, not quadruple, 5 to 6x of where we're currently at right now, because Apple was one of the most valuable companies that was publicly traded. And I know a lot of people don't believe in Elon, right? I'm not here to convince you. There's no way to sugarcoat it. I'm definitely a big Elon fanboy, but I don't like my hopes to overwhelm my investment decision, right? With where we're at right now, even if we just recover to previous all-time highs, right? That would be a 101% ROI. I think it's just important to talk about stocks that are obviously very oversold, but have a lot of potential or long-term growth if they pan out the way that they anticipate it, right? As of right now, we are testing previous support levels. If I was someone that wanted to play it safe, I would wait. If you're not big on position sizing, if you're too scared to take a position right now, there's nothing wrong with being scared, right? At the end of the day, you need to feel comfortable with what you're doing. I would say that wait for indication of a recovery, right? Just like last time when we broke above the moving average, when we broke above the EMA line, right? It was the 3 stages of a reversal. If you're part of my Learn Plan Profit group, you should be well aware of it. There's a rejection phase when it's making lower highs and lower lows. There's the consolidation phase when it's establishing a support level. And then when we break above EMA, this is the confirmation stage, right? This is when it's actually indicating signs of an uptrend. So to keep trading simple and to keep investing even more simple, I would say something to look out for is, instead of trying to buy it at the lowest price point, if you are a little bit newer to the market and you're just trying to get in at a good price point, even if you were to be someone that buys it at, the 250 range, it's not a bad price point, right? There's huge upside. It's probably still a lot cheaper than a lot of other people that have purchased it in the past year. So taking that into consideration, again, your job is not to be perfect. Your job is just to enter when it makes sense to you. So I would wait for confirmation of a reversal. But for people maybe like myself that is okay with buying Tesla early, I would buy a very small position right now just to get some skin in the game and then add more once we get that confirmation. But again, by buying before confirmation, that's a little bit more of risk. And you just need to understand that. If you're not okay with tolerating that, then don't buy early. And I think that's a good thing to take into consideration. So let's talk about Nvidia. Why not, right? After it reported earnings, it began indicating signs of an uptrend. I think this was an interesting one, right? It hasn't been too many times that Nvidia has traded above the EMA on the day chart, but Nvidia is definitely indicating signs of an uptrend. Now, there's a big difference of trading above the EMA and trading above the moving average. Nvidia has been selling off for quite some time, especially with the chip shortage. We could see that we're still far below the moving average. I would just tread very lightly here. Just like last time, it traded above the EMA for a very short period of time right before it broke back below and then made new lows, right? So just because we are trading above EMA doesn't mean that it's going to continue. There's one thing that we talk about: when we break above EMA, then we go back down to retest it. And I think that would be very interesting to see that when it does pullback should not scare you. Pullback should encourage you to see if it's actually an established support level. Because if it pulls back and actually validates it as a support and then it comes back to make new highs, that's a really good sign for Nvidia. But if it pulls on back, it breaks its support and then continues to sell off, then guess what? You just saved yourself by simply waiting for that pullback validation, right? And that's definitely something that we talk about within LPP as well, is again, not being afraid to give something time to see if it pulls back and forms these higher lows, right? Massive SQQQ rocket incoming. I like that, Casey. So I'm just going to guess, but Casey probably is shorting. Actually, from the time that we've been talking, it looks like the NASDAQ market is already starting to recover. It is in the red, right? There's no reason to sugarcoat it. So it's still down 0.5%. But yeah, definitely something to pay attention to. So I'll ask you guys a little bit later to see who's shorting and who's going long. So we got Emmett Cool asking for me to break down Dick's Sporting Goods. So we got ticker symbol DKS. Let's go ahead and break this one down. It looks like retail has not been hurt as bad, obviously, right, as tech. It's trading very similar to Walmart, right? Obviously not to the same caliber, but a very similar pattern. It looks like we're almost showing signs of a resistance here. Once again, I don't know if you agree with me. Showing signs of a resistance here just like it has been before, and then it sells off, right? So I'd be very careful. This would kind of be the same thing where we've been consolidating here for so long. We're almost establishing, right, this resistance range. So if we don't break above this, what's the point of buying if we're not making higher highs, if there's no progression? And the more that it consolidates here, the more potential that we could see, downside sell-in pressure, right? So I would set an alert if we actually begin to break below the moving average, then just allow the sucker to bleed. Let it sell off. There's no reason to be into it. But if we actually begin to trade and break above 120, that's confirmation of breaking above this resistance and then possibly working our way back to that 140 price point. So we're kind of at a critical point right now where it's consolidating enough that I don't think the upside potential is worth the downside risk. So this is why I would say wait for confirmation, wait for those higher lows to be established, and then move on to the next one. So let's go ahead and break down Ian, or is it Ian or Ilian? You're asking me to break down Facebook. It's not Facebook anymore, brother. It's Meta, right? Let's not forget about that. So Meta, this one hurts. So I'm not invested in Meta, but the reason that I say this one hurts is because I think that we can all agree that we did not anticipate this from Meta. If you actually think about Meta as a company, it produces a lot of cash, right? It's a revenue machine. There's no reason to sugarcoat that. But because of its heavy investment into the metaverse, if it ends up panning out the way that they think it will, Meta can be worth 10 to 20x of what it's worth now. But if it doesn't, they're blowing through billions and billions of dollars every quarter, right? They're still a very profitable company. They're still a very well-ran company, right? It's just they're investing into a new venture that maybe a lot of people just, don't see the value in as of right now. And then some people just don't like it, right? And that's fine. You definitely don't have to like it, but don't allow your opinions to cloud your thinking, right? It is very cheap, but the cheap can always get cheaper, right? That's not why I would buy Meta. I would pay attention to Meta to see if things begin to get less worse. So if all of a sudden direction begins to change. The reason I'm talking about this is from where we're at right now to previous all-time highs, 325% ROI. Now, I don't know about you, but I don't find it to be very realistic to expect to make every percent of that. Guess what? That is so much margin of potential profit that you don't need to be perfect, right? Set your alerts. I feel like we could all agree that Meta is a stock worth adding to your watch list. It's a stock worth paying attention to, and to see if things begin to get less worse and maybe a little bit better. That would be something that would be very exciting for something like Meta, with huge ROI potential and potentially an emerging market with the metaverse, right? As of right now, at least this is my opinion, the cheap can get cheaper. Let the sucker bleed, right? Direction is not in your favor. You're not missing out by not being invested. And that's the most simple way that I could explain why Meta is not a buy for me right now, because it continues and continues to sell off from its previous quarterly earnings to the one that was just reported. It has dropped 15 to 25% each time. And because of that, I just wouldn't rush into it. So yeah, for those that are shorting something like Meta, I'm sure it's been very, very profitable, right? I prefer to short the overall NASDAQ market, but I can definitely see why someone would have a big focus in shorting something like Meta. As of right now, it's just, odds are not in its favor with the metaverse, but it never has to be, right? Long term. All right. So let's go ahead and move on to the next one. Let's talk about DraftKings. And I know why you're asking me about DraftKings. It's because they just reported earnings and they gapped down and nearly at 52-week lows. So DKNG just reported earnings. They lost 27.82% on Friday alone. It's been making lower highs, lower lows. It's going back to retest its previous low at $9.77. Again, a very simple message for all people that are trying to catch a falling knife. The cheap can get cheaper. Moments like this, it's easy to make money when direction is in your favor. You don't need to be perfect with your entries. You don't need to be perfect with your exits, because overall direction is in your favor. As of right now, it's the opposite. Direction is not in your favor. So therefore, it's much easier to lose money. It's much more challenging to make money if you're trying to go long. This is why you need to be careful with your position size. And even if you decide to enter, it makes no sense to me on why someone would want to enter right now when just simply direction is not in your favor. If you're trying to go in for a swing trade of buying the lows and then selling when it moves up to the moving average, it's just a riskier swing trade. And if you're an absolute beginner, probably not an outlet I would recommend, right? But to each their own. You guys are all adults. If that's the way that you want to trade, so be it. All I'm here to do is to explain to you why it's so challenging and why it's so risky. And it's for one simple thing: direction. Direction's not in your favor. Allow it to be. It's still not going to be easy, but it's so much easier when it is. So, all right, let's go ahead and let's do. Michael is asking for me to break down Boeing. That is ticker symbol BA. Again, Michael, I hope that I can earn your thumbs up in this video. And if so, don't forget to subscribe as well, right? Well, I think you should be. If you guys are trying to, I don't know if it allows everyone. YouTube sent me a notification that it will only allow people that subscribe to my channel to comment in the live chat, but maybe it just said that and did the opposite. So, all right. We got Boeing here. Boeing is a company that I would see it to be as, a long-term play, right? Boeing is a company that literally I cannot see it going bankrupt. It just wouldn't make sense for the United States, right? It's one of the world's largest manufacturers for planes, and that's government contracts, right? I see this to be something that I don't think enough people talk about long term, and I think because it's been struggling so much lately, and rightfully so, right? So Boeing, as of right now, trading at 160, has hit lows of overall 118, or really 89. That was during the pandemic, but as of right now, it's still trading below the moving average. It's testing it, right? So it'd be quite interesting to see where this thing actually ends up at. Boeing used to trade, if you actually pay attention to it back here, at an average of around $350 a share with overall highs of $443. And then the pandemic happened, right? And it's been struggling ever since. We're definitely on the oversold side, but like we've said before, the cheap can get cheaper. I think that, just like Michael, who asked me to break down Boeing. I think Boeing will be a company that a lot of people overlook. And it's because it's not a spontaneous company. It's not a company that seems to be doing anything very exciting. But guess what? It's an established company. And with its government contracts, I could not imagine it going bankrupt, right? We need Boeing. Not only just as a country, but with all the different other businesses and airlines that use Boeing, right? For me, this would be something that I can see myself investing in long term. I just have seen it struggle for such a long period of time that it's scary, right? But let me ask you guys one thing. What is one thing we can all do anytime something is scary? We can manage our position size, right? No one's telling us how much we need to invest. I can buy one share. You think I'm going to be scared if I buy one share? But Ricky, what if it goes all the way down to 100? Well, I only bought one share, right? It's all about position size. Maybe instead of going in with, $10,000 or $50,000, I can go in with $1,000 just to have some skin in the game to follow up with it and take it seriously. You know what I mean? So as of right now, it's still getting rejected by the moving average based off of last time it did get rejected and then made and tested previous lows. So it's just going to be something that we have to follow up with. I just saw your message. It says, Eric just said pray. Yeah, a little bit different, right? I don't think praying will do much when it comes down to these publicly traded companies, right? They're positions that we put ourselves in. But I think it's the way that you put yourself in these positions that's really going to define you as a trader, as an investor. You should never be motivated. You should never feel forced to take a position. If you see potential in something, then just ask yourself, well, how risky is this? And a way that you can moderate your risk is by moderating your position size. You don't always have to be fully invested. You can buy fractions of a position that you see value in, but that might be very risky. So you just buy 1/10 or 1/20 of what you would normally buy it with. Okay? Buy and pray. I like that. But let's go ahead and move on to the next one. So let's see how many we've broken down so far. 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's go ahead and do 2 or 3 more. How does that sound? Does that sound okay? Hopefully you guys can drop a thumbs up. It looks like we have about 1,000 of you guys here. So hopefully you guys can drop a thumbs up and I can break down one of your guys' stocks. So, alrighty. I wanted to do some that we don't do too often. So that one seems interesting. SOXX. Let's go ahead and break that one down. All right. So this is a semiconductor ETF. And okay, this is actually quite interesting because this one would follow very similar patterns to Nvidia and AMD, I'm guessing, right? I'll have to follow up with this one and do a side-by-side comparison. But let's look at this. So this is SOX, and then let me look at Nvidia very quickly. Okay, pretty similar pattern, right? Overall peak, been making lower highs, lower lows ever since the end of 2021, right? Yep, end of 2021, peaked. It's been selling off ever since. Okay, so it's an ETF. Is it leveraged? I'll have to double check. So based off previous all-time highs, offers 66% ROI, something like Nvidia. So it looks like a more standard. That's 138%. Yeah, so it's not going to be for the ROI potential, but I feel like it's a more standard. It's just an ETF, right? So it's a fund that focuses on semiconductors. Obviously, direction is not in our favor. I think the moving average is a great indicator for that. When direction is in your favor, we should be trading above the moving average, right? The overall pattern should be above the moving average when something is bullish, when something is bearish, it's very easy to see because we're trading below the moving average, making lower highs and lower lows. So we have a long way to go. Again, if I was going to be very conservative, I would wait for the break above that $400 range. If I wanted to be a little bit more risky, I would wait for the break above the EMA and then sell close to the moving average, as that's where it tends to get rejected, right? But again, direction is not in your favor, so that's an extra layer of risk. And ask yourself, again, do you want to be that risky? So I'm really glad that you brought this one at least to my attention, because I'm sure not only myself, but other people would value to look more into this to see if this is, an ETF that they potentially want to invest in, as long as it's not more than a single leverage, right? Let's go ahead and break down Amazon. So I see, why not talk about Amazon? Amazon is nearly at a 52-week low. This is just my opinion, but I feel like we're going to look back on Amazon stock when it's trading below $100 a share and just be like, wow, why did we not invest in Amazon stock? If you look at Amazon stock from where it's at right now to previous all-time highs, it offers literally 108% ROI. It could just be me, but this shouldn't encourage you to buy blindly and to buy everything you can, because the market can always get cheaper. But at least for myself, it's not an if the market will recover, it's a when. And when it does, we all know that Amazon will recover with it. Amazon is a tech giant, an e-com giant. It makes up 80%, if I'm not mistaken, or nearly 80% of all the e-commerce that happens in the United States. With that being said, it's a monster. It's a monopoly of a company. And I think we're just going to look back and be like, I can't believe there was once a time I was able to make 100% ROI and I didn't even buy one share. I think that's what's most important. So it's not about buying a lot of it, especially during this uncertain time, but it's conditioning yourself to understand the value of a company and how it can tolerate these type of recessions, and going in with a portion of something you can tolerate to make it easier to withstand the time that it will take for the market to recover. And I think that's what's most important. It's the people that actually go out of their way to think of, okay, well, how many shares am I okay with buying of Amazon right now? Maybe you could afford $10,000, but instead of buying $10,000, maybe you just buy $500 of it because you're still uncertain. And guess what? I think that's clever, because you're putting yourself in a position in which you can tolerate, not because you need to, but because it makes sense. It's not because Amazon stock is at the cheapest price point, because it can definitely get cheaper, especially with this inflation report. It can drop to 80, it can drop to 75. It's not about that. It's that you're getting in at a price point that you value. And I think that's what matters most. So do you believe that we are in a recession? Well, technically the definition of a recession is 2 consecutive quarters of negative GDP. And with that definition, my answer would be yes. I do believe then we are in a recession. And I think it's safe to say, with how we see interest rates as of right now, how we're seeing the slowdown in the economy, I just don't think the word recession means what it used to before, right? Based off of unemployment report, unemployment is going up, but rightfully so. We have very, very low unemployment. It's less than 4%. And let's be honest. Let's be brutally honest. Do you guys know what unemployment rate is? It means anyone over the age of 18 who can work and is trying to work does not have a job. 4%. Let's be honest. We all know, right? We know people. We have friends. We have family members. Can you believe that 4% only can't get employed? Let's be honest. That's a very low number. That's a very generous number. I don't even believe it, because I don't believe everyone necessarily nearly at 4% even should have jobs, right? Especially with the lack of seriousness or discipline someone has. But it is what it is, right? We know funny people and we're like, really, you have a job? It doesn't surprise me at all. 4% is very low. The Federal Reserve has a goal of 4.1 to 4.4% by next year. And it will not surprise me if unemployment rate goes up. But guess what? It's all about shedding the fat out of, a company. And there are bad employees, and they need to understand that, right? We all know those people that are just like irresponsible people. It surprises me that unemployment is so low. I do not believe that 96% of people in the United States should necessarily have a job. I think that's too generous. But again, I don't run the country, so it doesn't really matter. So I really do appreciate you guys' time. I'm not going to take too much more of your guys' time. That was a total of, I think, 11 different stocks, and I would be more than happy to break yours down. You guys can always just send me a direct message via Discord, and that's going to be that first link in the description. Friendly reminder, I do trade live every day, and I only do that with my Learn Plan Profit group. You guys have probably heard of them before. And again, if you want to work with me on a closer basis, if you're new to the stock market, if you're a complete beginner and you want access to our A to Z video lesson library, if you want access to me and to be able to watch me trade live every day, excuse me, I almost burped. But if you want to watch me trade live every single day, I offer one thing. I offer nothing else but this one thing. It's the second link in the description. It's my Learn Plan Profit 2.0. It's a one-time payment, it's lifetime access, and right now it's our biggest sale and it's $150 off. You can choose to sign up and take advantage of the sale, or you can just continue to stay subscribed to the YouTube channel, right? But for those that do sign up tomorrow at Market Open, I will be going live. So I'll see you for that live trading session. And if you need any assistance joining the live, within the first 3 videos of the course, it explains to you how to get access to our Discord chat and how to watch me trade live every day. I really do appreciate you guys' time. Hope that I earned your thumbs up in this video. Please make sure that you subscribe if you guys haven't done so already. And for all of our new and existing Learn Plan Profit members, set your alarm for Market Open. Just make sure that you adjust it according to daylight savings, and I will see you tomorrow at Market Open for our live trading session. Like always, let's make sure that we in the